Are you ready to level up your business game and score major tax benefits? Dive into the world of smartphone tax perks and discover how different business setups can unlock big savings. Whether you're a part of a squad or flying solo, this one tax hack you don't want to miss. Let's dive in and make those dollars work smarter for you. Today, we will talk about how different types of business entities can affect the tax benefits you get as a small business owner when it comes to your smartphone expenses. Whether you run a sole proprietorship, a corporation, a partnership, or an LLC, there are ways to benefit from these tax rules. So here's the good news. Depending on how you structure your business, you might not even need to keep detailed records of your smartphone used to enjoy these benefits. Yup, you heard that right. Thank the IRS and your lawmakers for this. And it gets even better if you have employees or independent contractors. You can actually pay for their smartphones and skip the hassle of keeping phone use records. It's a win-win for everyone involved. Watch out this video till the end for more details on these awesome smartphone rules. When it comes to the benefits of the smartphone working condition fringe benefit, the definition of an employee is broader than many would think. It encompasses various roles within a business, such as existing employees, including the business owner if they're employed by their own corporation, partners in a partnership, directors in a corporation, and even independent contractors providing services. This inclusivity means that a wide range of individuals within a business structure can potentially benefit from these tax-saving opportunities related to smartphones. However, if you're operating as a sole proprietor, you won't fall under the category of employee for these specific benefits. Nevertheless, there's no need to worry because sole proprietors still receive advantages from these legal changes. The nuances of these benefits for sole proprietors may differ slightly, but they can still navigate the tax landscape related to smartphone expenses in a favorable manner. For example, while employees of corporations or partnerships may have certain fringe benefits related to smartphones covered by their employer, sole proprietors have the flexibility to deduct business-related smartphone expenses directly. This distinction highlights the varied but equally beneficial approaches available to different types of business entities under the updated tax rules concerning smartphones and similar equipment. Alright, let's break down the awesome perks of getting a smartphone from your business for non-compensatory reasons. Firstly, you get to enjoy a de minimis working condition fringe benefit, which basically means the use of your phone for work doesn't count as taxable income. Score. Next up, what is the cost of the phone itself? Yup, that's deductible as a business expense. So not only do you get a sweet device, but your business gets to save some cash too. Now here's where it gets really cool. You don't have to stress about keeping track of how much you use your phone for work versus personal stuff, as long as it's mainly for business. You're all good. No need to split hairs over calls or texts. And guess what? There's no need to stress about fairness either. The business can decide who gets these awesome smartphone benefits, and it might just be you. So kick back, stay productive, and enjoy the hassle-free perks of a business-provided smartphone. To qualify for tax benefits related to providing smartphones, your business must primarily offer them for non-compensatory business purposes. These purposes include staying connected for work emergencies, facilitating communication with clients outside the office, and accommodating clients in different time zones beyond regular work hours. If your business is structured as a corporation or partnership, meeting these criteria should be straightforward. However, be cautious, as providing smartphones for reasons like promoting goodwill, boosting morale, attracting employees, or as additional compensation does not meet the non-compensatory test and may not qualify for these tax benefits. The smartphone, referred to as a cell phone in IRS Notice 2011-72, encompasses similar communication devices. Tablet devices like iPads are also considered similar equipment as per the IRS audit manual. Your business doesn't have to directly purchase smartphones and calling plans for employees or partners, although it's an option. Instead, you can offer a cash allowance or reimburse the actual plan usage. For instance, if you pay a flat monthly fee for your smartphone service, including the phone cost, and operate as an S corporation, your corporation can reimburse you for the entire monthly fee, even if you use the phone for personal and business calls. According to the IRS audit manual, these reimbursements aren't considered taxable income if specific conditions are met. Firstly, the employee must maintain smartphone coverage aligned with the business needs. Secondly, the reimbursement amount should be reasonably calculated, not exceeding actual expenses incurred. Lastly, the reimbursement shouldn't act as a substitute for regular wages. What's convenient is that there are no accountable plan rules for these reimbursements. You just need a reasonable calculation or can directly reimburse based on the phone bill, making it a straightforward process. The IRS easygoing approach to smartphones applies to your employees but not to you if you're a sole proprietor or the owner of a single-member LLC not taxed as a corporation. If you fall into this group, you deduct your monthly business-related smartphone costs like any other business expense, such as rent or utilities. You also handle the cost of the smartphone itself as you would any capital property like computers. However, there's a silver lining thanks to a change in the law. Smartphones are no longer classified as listed property, simplifying matters. Yet, unlike corporate owners, you must substantiate your percentage of business use. For instance, if you use your smartphone 75% for business and 25% for personal, your deduction for expensing, depreciation, and monthly charges is based on what 75% business use. To prove your business use, you'll need to keep track of your calls. One easy method is to tallying business and personal calls from your smartphone bill. You don't necessarily have to comb through every bill for the entire year. A 3-month sample can suffice if your call habits are consistent. If managing call records sound tedious, you can opt for 2 phone numbers on your smartphone, one for business and one for personal use. Technology makes this dual number setup feasible, offering a streamlined approach. Guess what? The IRS has a neat trick up its sleeve for independent contractors. It treats them like tax-free, tax-favored employees when it comes to smartphones. So if your employer, like a client or broker, hands you a smartphone or reimburses your smartphone expenses, you're in luck. You get to enjoy this special status. However, if you're an independent contractor and you're not getting reimbursed for your smartphone use, it's a different story. In that case, you're considered a proprietorship for smartphone purposes. That means you'll need to follow the prove your cell phone use rules we talked about earlier. So if you're getting reimbursed, it's smooth sailing with tax benefits. But if not, you'll need to handle your smartphone expenses a bit differently. If your business isn't a sole proprietorship, you're in for some tax savings perks with your smartphone expenses. As a corporation or partnership, you have the green light to have your company cover 100% of your smartphone costs, even if you use it for both work and personal stuff. Plus, you get to decide which employees or partners get the school Fringe benefit. No discrimination rules to hold you back. Here's the icing on the cake. You and your chosen beneficiaries don't have to keep records of smartphone use. Pretty neat, right? The main catch is that the smartphone can't be seen as compensation and there has to be a legit business reason for it. Now, for sole proprietors and single-member LLCs taxed as sole proprietors, things are a bit different. You'll need to maintain basic business records showing your personal and business use of the smartphone to deduct only the business-related expenses. However, the good news is that the smartphones are no longer considered listed property, requiring meticulous records, making your life a tad easier come tax time. Alright, fam, we've covered some lit deeds about how different types of business setups can score big when it comes to smartphone tax benefits, from employees to partners, directors, and even independent contractors. There's a lot to unpack here. And hey, if you're a lone wolf rocking the sole proprietorship vibe, don't sweat it. You're still in for some major perks thanks to these legal changes. So remember, to stay on top of those business records, keep things legit, and enjoy those sweet tax breaks like a boss. Until next time, keep hustling and keep those phones charged. Peace out.